Hello, everybody. This is Dr. Fraud, Michael Skiba. I'd like to welcome you to DFTV episode 14. So excited to see you and actually be here in person. So I think that's why we were so excited for this episode, because we have been close to 14 months since we have done an in-person DFTV, and so excited for our guest and our topic today. I'm going to introduce Paul and our topic in a minute, but again, just thank you for all your support throughout the last year and a half. We hopefully are going to be doing more of these in person. So we have our next episode coming up in about 5 weeks on social media, and we're booking into the summer too. So please keep sending those awesome topics to me. If you'd like to be a guest as well, just send me your information and your ideas, and we'll definitely get you clued in. But a lot of cool stuff to talk about today in this episode. And again, we are here in the offices. We are at the offices of Ferraro, Amodio, and Zarecki, and this is one of the partners. This is Paul Zarecki. Paul, welcome.
Mike, thank you.
Yeah.
Thank you for having me with you today. It feels great to be together.
Absolutely.
That's for sure. It's been too long. So looking forward to conversations today about fraud in particular.
Absolutely, yeah, and I think Paul and I go way back. We've known each other for years, professionally, personally, and I figured when I saw this topic, I was like, all right, Paul, got to call Paul. He's a go-to guy on this, as is the firm. So we're going to be talking about an interesting case. We're going to be kind of picking it apart. So as always, definitely, I have a lot of great questions you guys sent me. So thank you for that. Love to engage in the chat as well. So I have the chat box open here. And we'll absolutely get to your try to get to your questions during the event. If not, we'll absolutely follow up with you later. So I just want to introduce Paul too, more on a formal level. So Paul is a partner here at FAS Forensics in Saratoga, beautiful Saratoga Springs, upstate. And the firm specializes. You guys cover Northeast.
Northeast, pretty much. We have a satellite office in the Boston area, as well as down in White Plains area and Saratoga Springs. But we, with this day and age with technology, we do work all over the country, which is great. So, but yeah, that's our specialty, is forensic accounting. We get involved with a lot of litigation matters, insurance loss accounting, as you know, Mike, and we do some business valuation work as well.
Fantastic. And Paul has over 20 years experience, also president of the Albany ACFE chapter, and a member of multiple other groups as well, and a Lemoyne grad.
Orangeman.
Okay.
Dolphin, close to.
Okay, all right. So
Dolphin.
You're there. Okay.
Syracuse,
We won't hold that against you, but all right.
Dolphin, yeah.
I thought you were going to say Miami Dolphins, but yeah. And that's actually a perfect segue into our case. So what we're going to do is we're going to talk a little bit about this case. Very interesting, and it's the kind of thing that Paul and I see on a regular basis. Definitely looking for your feedback as well. I know we have attendees from different size organizations, different type organizations, inside financial sector, outside retail even. So definitely looking forward to kind of engaging with you on how this resonates with you. And that's kind of the idea. We want to pick apart the case, but also maybe, give our attendees some things maybe to take back, to their respective spots too. So Paul, let's just start talking about the case a little bit, some of the basic facts. So what's interesting, the gentleman that we're talking about, I say gentleman, I should use that term loosely, David Allen Smith, so 46 years old when he was arrested. This was based in Florida, so in Wesley Chapel, Florida. Now, the final counts that came in on this, he pled guilty, 3 counts of wire fraud, 3 of mail fraud, 2 of aggravated ID theft. So we got some interesting things there to talk about. Now, kind of how this worked, he was a facilities manager for a company called Quest Diagnostics, pharmaceutical company, which we know usually high volume, high revenue, usually. And he had a position of a facilities manager, which is important to note too. We'll kind of get to that a little bit. And so this is what's interesting too. His kind of fraud precipitated back in 2001. The final arrest was 2008. So again, very interesting. Some things that we'll come back to there. So I guess how this worked, basically, he had one company he set up was called Environmental Tech. So he set up these fake shell companies in his name somehow without it being traced back to him. Then what he claimed is in his position as facilities manager, he claimed they had expenses, apparently could be travel expenses or invoicing, whatever it was. So he claimed he was paying expenses on their behalf. So then this environmental tech, has $1,000 bill per se for a travel expense. He makes a fake invoice from environmental tech to himself as the employee of Quest. He submits that, fakely submits it. He signs, forges his supervisor's signature. It gets paid, and then he takes the funds and puts them back into his account. I think the total fraud was about 1.3 mil that he got away with. So he kind of had a bunch of things going on. It was a federal and local case. So, Paul, tons of stuff to talk about here. I mean, yeah. So, what's your first idea, first thought with this?
Well, the one thing with this case is I'm not exactly sure what the size of their accounting department. I don't think it really got into how big of their accounting department is. And the first thing that you obviously see is a lack of internal controls, segregation of duties that are occurring for the situation. And I don't know how much of this information was actually being reviewed. You talk about it was his expenses that he was submitting to get reimbursed. But in fact, his expenses incurred costs associated to vendors. So if somebody was in fact reviewing that, they would say, well, why is he paying that versus the company itself? Why is he actually paying that? And one of the things with vendors, I mean, because aside from his expense reimbursement fraud that was occurring, there was a billing scheme fraud that we discussed a little bit about this. He actually set up that shell company, and he actually, and that when setting up a shell company like that, you're setting up a billing scheme that typically vendors or businesses will pay. In this situation here, the one thing I asked was how often were they reviewing their vendor list? It's very important for businesses, in my eye, to at least on an annual basis, print out your vendor list, take a look at the history, make sure that whoever's in control there is not, basically deleting that vendor, setting up a new vendor. So periodically review your vendor list, and then take a look at the names. Because very easily, if somebody is actually reviewing disbursements, Mike, out of the business, they may look at a name and say, oh, that's very interesting. Okay, we're paying ABC Company. We've always been paying ABC Company. But how do you know there isn't just a little bit of difference in a name? ABC Inc. or ABC, One. Okay, so take a look. You may, when you print out the vendor listing, you may identify, wait, we have ABC this and ABC that, and the addresses aren't the same. It would give you something to look at. So one of the times when I go out there and I talk to people about internal controls and segregation of duties, it's very important to vet your vendor listing. And I think that would have been important. It seems like he had a lot of control himself doing this, to do that.
Right. It's interesting when you mentioned the vendor list. This is one of the things that I probably end up saying this once a week, talking about how there, anyone that has any connection with vendors, it's just there's so many vulnerabilities in that system, and like you mentioned, because a lot of times what you have, and even companies I worked for, you had someone like a liaison with certain vendors, let's say an insurance company would be someone overseeing the auto vendors, right? So that one internal employee would oversee 5, 6, 10 other vendors. It's interesting, you think about the vetting process, and it's a really good point because, in some of the, I'm thinking of like, let's say a provider investigation, right? Where you're looking at who owns the company. I mean, you're really diving in. With a vendor list, if you have 200, 300 vendors, I mean, how much are you really doing looking into like this environmental tech? I wonder, and again, I couldn't really find much on this company case, but I don't know, how was it able to be precipitated that, it was actually just in his name, and Florida laws, I mean, right, like I'm thinking in New York, right, you have your business options, your single member LLC, your sole proprietor DBAs, but you all have, those are all linked to social security numbers.
Correct.
So it's, so, I mean, unless you're setting up an S corp or something, I mean, it's interesting to me how, I mean, it's interesting, but it doesn't kind of surprise me, if you will.
Yeah. And if you think about businesses and just small businesses in general, typically it's always like, well, I know this person can, supply us with this, this particular gadget and stuff like that. Businesses are built on relationships, and it's built on from the owner down. And so you get a person like in this situation here, the owners in this situation may have trusted this individual, but they didn't verify. They didn't take the time to actually review some of that information.
Right.
So I think that's very important when it comes to, in this situation, we're talking about reimbursement fraud schemes, but we're also talking about a billing scheme fraud that occurred as well. When you talk about reimbursement schemes, there's a couple things. I mean, that's basically, we talked about, padding expenses. I travel, for work as well as so many other people in our industry, at the end of the month, you get your reimbursement, or you get your expenses, and you put them together and you submit them for reimbursement. But how much is actually being watched? How many is there somebody behind there actually looking at what is actually there? When you talk about reimbursement schemes, you talk about there's a potential of multiple reimbursements. You get a situation, one or two people that go out to a dinner. Are they both submitting that same receipt? Potentially, two people went out with a client. Are they both submitting that? Are you getting the original receipt? Are there fictitious expenses on the reimbursements? Are there, one thing that, I think about sometimes is, let's think about continuing education. You and I always have to get to continuing education and getting additional, certifications and stuff like that. Somebody looks for a reimbursement on a class that they took. Classes are not cheap. You could pay for a class. It could be, $500 for a week or $800 a week. Are the people that are actually paying the reimbursement actually getting a certificate to show that they actually took that class? They could actually cancel that class, get that money back, and get the reimbursement from the company.
Verification
So there's so in that situation, you have to be aware of, fictitious expenses that may be on there. Obviously overstated expenses, that has to do, with what about cash? If somebody pays cash, how do you know exactly what it is? So there's a lot of things like that. But
it's interesting when you talk about that. I was just thinking of the padding expenses. So that's worth spending a little time on, because I know a lot of the attendees mention that, and I remember even, it seems like sometimes when we talk about corporate culture, we know how big that is, the code of conduct and all that, how you set the stage right at the beginning, first hire, coming in. But, you think of those, I've it's even happened to us too, where, you go to a new job, and you're out your first time, you're a new trainee, and you're with all senior level people, and, you see them just exaggerating, right? It's nothing egregious, nothing that we would consider illegal per se, but I mean, they're, add an extra coffee on, or have a friend come with them. I mean, there's just such a gray area, but when you witness that, it gets passed along as being acceptable, and it's funny because I've seen statistics on this showing that padding an expense account, people kind of equate it equally acceptable to itemizing deductions. And kind of, being creative, exactly. And it's not, it's not really acceptable, but it's not unacceptable. I mean,
and I think that you make a very good point that this does occur. And we talk about culture all the time when it comes to fraud, and it's the top down. What is being passed down from the top, and if people are noticing that their superiors are doing this a little bit. Getting an extra drink, or, businesses need to set policies and procedures in place. Whether it's limits on particular dollar amounts, whether it's for dinners, okay, here you can go out to dinner and we're going to pay for your dinner with the client, but here's what we're looking at. You're not going to, XYZ's restaurant when you can go to something a little bit cheaper. So I think by putting some policies and procedures in place, I think you will minimize the potential of, the issues with reimbursement fraud.
Right. And I think, that code of conduct, we talk about that all the time. I mean, it's so basic, right? It really is. I mean, but starting in the beginning, and then you often see, like, even as part of, and this is one of the things that I always recommend when I do corporate training is, revisit that. A lot of times it's like, okay, once you're onboarded, you're educated, take the quizzes and you go through the motions, check the boxes. But then how many times, I'm thinking that a couple companies I worked for a decade. I mean, I don't even remember what the code of conduct was, the ethical code of conduct. I mean, we got the training once a year. We were required to do that. But to really sit there and make it, put some effort into it, make your employees just read it, maybe sign it, something. I mean, because it's just so important, because
And nowadays with technology, emails, it could be something that's set up on an annual basis where these policies and procedures, just like anytime you log into something on a website now, you have to click a box before you can go forward. You basically have read this. And companies can do that. They can put it right onto their website or right onto an email that goes to the employees. They open it and they basically click that they agree to it on an annual basis. It gets it out there, or I mean, or else, I think we talk about when it comes to fraud, and we talk about tips being the most important thing for identifying a potential fraud within an organization. I think it's in excess of 40% of the time that a fraud is identified, it's based upon a tip. So you need to make your employees and your staff and your company aware of a no tolerance of these particular situations, and then the importance of being able to go anonymously and speak to people so you can identify these frauds. So making people aware, employees aware of what could occur out there.
And I think too, setting examples too, when you do have those situations that come up, at least, it's not like you have to have situations where you're, firing an employee for a small exaggeration, but, showing that someone is watching, that it is on the radar, and that the company takes that seriously, because I mean, these are things we see, how that really does affect, a bottom line. We talk about profitability, the internal frauds. And it's interesting when you look at the statistics, how, and I find these statistics fascinating about how, when you're talking about internal fraud, the misrepresentations, two things that are so important with that is one, that in all those big cases that we've had, they always start with the small exaggeration.
They start small.
You get away with it. It's like, it's like nuggets. And it gets bigger and bigger. So companies, one, need to make sure that this is an area they focus on. But secondly, too, most employees that come in, 96% have no prior criminal history.
Correct.
So background checks, you do the best background check in the world, and it's not going to actually.
Because the person never did anything in the past. But what happens, this is what happens, Mike, and we've talked about this time and time again, is that sometimes when there's limited controls, limited staff, and that's what the, and when you think a lot about small businesses, they do have limited staff. So how much are they actually really going to have the checks and balances in place? But we see it time and time again of the importance of it. I'm involved in so many cases where if they just had somebody looking at this, and you talk about time, right? In this situation, reimbursement schemes, they can last up to, on the average, according to the ACFE, 14 to 16 months. And you and I both know I know it is incredible. You and I both know the longer a fraud goes, the person becomes more comfortable, and the larger the dollar amount of that fraud happens. Because the more they become comfortable, the more they're going to take time and time, throughout. So it's having some checks and balances in place to mitigate it. That's what it is in the end. So it's really interesting. When it talks about, the other thing when I talk about reimbursements, expenses, because that's what we're talking about in this situation here. Somebody that's reviewing things when it comes to reimbursements, you should look for inconsistencies that occur on there. You could look for problems with calculations on there. The other thing too that comes up is nowadays there's actually apps out there that people can use, and these apps help both the employee as well as the business to keep things in line. Because one of the things people always say is, oh, I forget my receipt, or I lost my receipt. Because you want original receipts versus what's on the credit card. That's what you ask for. You want the original receipt. These apps, you could basically take a picture of it, and it's loaded right up into the employee's database, and that's submitted right to the employer. look into some of these apps out there that are on, that you can find on the app stores.
Right. And I think two points there I'm thinking of is one, when you mentioned, apps, thinking of technology. And that's one of the things, as many of you know, I dabble a lot in the IT, fraud detection platforms. And I think that's one of the interesting things when I look at something like a case like this. I think, this is what we look for data outliers. You just mentioned that, an outlier, anything like in something like this where, right, if a data platform saw a system or saw payments to environmental tech that were more than usual, that were, more than the norm, higher than the norm, lower amount, higher frequency, things like this. I mean, a data tool would pick that up, in a minute. So some of these bigger companies, I think, I would think, well, hopefully they would pick up on that. But as you mentioned, from your perspective as a CPA, right, this is what you look for on a manual basis. You look for, hey, why is that payment? Like I'm thinking of a situation, a case I worked on with insurance agents. And I mean, this is one of the reasons why we found one of the biggest frauds is actually in upstate New York, because the agent, it was through anomalies. We found through payments that agent was just doing different types of business, more very, very, very savvy, but probably wouldn't have found it manually. But it was just enough to, it was like out of 100 agents, he was an outlier. So it just kind of popped in, and then we brought the experts in, and they actually traced it back. So
and you could do that within just a company itself. So you get a large company, you could take a look at it by department.
Right.
And you could take a look at the reimbursement expenses by department. And then you could identify, well, why is this one department a lot more than the other five?
Right.
Do they travel more, or is there an issue? Because it is. You and I both know it's all about trends and taking a look at the outliers and the inconsistencies of the typical trends within a business.
Right, within a business, right.
Yeah.
And I mean, it's because we do have folks on the line. And actually, Dominic, a great point, talks about random audits. It's huge, right?
Yep.
When we talked about, the hotlines, I mean, random audits so actually, random audits, I mean, do you recommend, a internal, external? I know there's a big difference, that some have compliance requirements and things like that. So that, whether it's an annual or biannual, whatever it is, but also how often would you recommend, a random audit to a small, small business, let's say 200 employees less or something?
When I take a look at a business and I have discussions with the owners and the board, and I say, you know what, it's a good idea to basically, as we call it, kick the tires.
Right.
Let us come in there and periodically take a look at various cycles of the accounting system.
Yep.
Let's say we're going to look at accounts receivable, or we're going to take a look at accounts payable. And surprise audits are the best because nobody can plan for anybody coming in there.
Right.
But we think it's critical to do that because aside from getting involved in the investigation of frauds that occur, we work on the proactive side as well. So we work with companies to basically get your internal controls within where they should be. And we recommend a lot of times when we do this work is that we go in there, we discuss some of the issues, some of the faults that you have. We provide a lot of recommendations to you, but then we turn around and we say, listen, we're just not going to leave. We think it's a good idea that we have a follow-up in 6 months to 9 months to take a look at things. And then you should continue to do that because, when perception is everything when it comes to fraud, in my opinion.
Sure.
If people perceive that people are constantly looking at things, it may deter them from committing fraud.
Right.
So even if you have us come in there, or anybody come in there and basically take a look at a particular cycle within your organization, it may prevent issues occurring within that business.
And even simple things like training. I know this too. A lot of times we'll do training, simple training. I mean, nothing. No deep dive. Just something on ethics, honesty. And it's amazing how even after that, I'll get feedback from even the supervisor, manager, just claiming how much of an impact that could have. Because it's just awareness. Because it basically says, hey, we take this serious. Or, as Dominic mentioned, a random audit, fantastic, right? Just to know people, hey, you know what, we're watching. Because what we do know too, in frauds and scams, it's all about opportunity, 100%. I mean, it's all about reducing the opportunity, reducing your vulnerabilities. When you do that through showing those multiple, you have a hotline, your code of conduct, you're doing random checks. And obviously in this case, you made some great points on things that they could have done, the internal controls, checks and balances, four eyes. Obviously, there's a lot of different things there, that could have probably been done. But too, again, the small businesses, they don't have those big budgets that we're used to. But taking those manual, I think that vendor, I think too, I don't know if you find this to be the case, but even in the last couple of years, there's such a trend in businesses to outsource. I mean, so right, instead of having an HR department, they outsource it. Instead of having someone doing background checks, they outsource. So the relationship with vendors, the volume has just got to be a lot higher than it used to. So in other words, just like you mentioned, even as a small business, make sure that you're vetting these out. Flags, I think it was a great one you mentioned, is try to set everything electronically, because then it can be traced.
Absolutely.
Right, paper trail, incredibly difficult. We know this. In the weeds, looking at these cases, finding a check, a receipt, it's hard. So I mean, using those electronic formats so experts can track stuff down.
And I think the more you set of a policy in place and procedures in place, and you stick to them, you will minimize the behavior, the fraudulent behavior that could occur. Because people will realize that you are really looking at this stuff. And that's what's important when it comes to fraud in that situation. On the average, like I mentioned, these schemes can last 14 to 16 months, but it can amount to, I think, according to the ACFE, their 2020 study that they do, and about the studies they do, Association of Certified Fraud Examiners. I think on the average, I think it was like over $30,000 a year for a business when it comes to reimbursement schemes. And that's huge. That's huge. That's a big dollar amount for a small business. And so it's important to really look at some of these things, I think.
To keep at it. Now, I know, Paul, we're getting close to time here. It goes by so quick. We could chat here for another 2 hours, because there's so many things to pick apart. So on this case here, I mean, for me, final thoughts is just, again, when we look at a case like this, we kind of think there definitely are some, loopholes here that kind of fell right through the cracks. Kind of surprises me, because it is a big pharmaceutical company. But I think there are, as we mentioned, there are some things, hopefully that you can take from this, maybe try to implement. It doesn't have to be anything hardcore. It can just be the simplistic, back to basics approaches that we know.
And most likely in this situation, they had policies and procedures in place. They just were not followed. In that situation. And there became a comfort level with this particular individual and what they were doing. Look at everybody. Everybody's an employee of the business. Look at all of their activity, all their, no matter how long they've been there, no matter what relationship they have to you. It's important, because I have seen, and you have seen, many situations where the most important person, or the person, even a relative within the business, has committed fraudulent behavior. And that's your business, that's your livelihood. And to be honest, I think I saw a recent study that I think, as for business failures, I think of the businesses that fail, I think it was 50% of the business failed because of some sort of fraud that occurred within the organization. So
in a couple of years,
it's your business. And just make sure you're doing the right things, and not necessarily doing the right things. You have a lot of these policies and procedures in place. Just make sure they're being followed.
Just enforce them. Enforce them. Make sure that people know you take it serious. So this was great. So Paul, last question to you. As someone that has 20, more than 20 years experience in this field, what's the craziest case you've ever had? You can tell a war story here for a minute.
I could tell.
I know you could.
I have an interesting case of investor fraud that our firm worked on a few years ago, and I don't know if I mentioned to you, but it had to do with a very popular vegan restaurant down in New York City. And actually, this was all over the New York Post. You can go there and find it. So our firm was involved with this fraud, and so what happened was, essentially, to make a long story short, I'll try, is that the lady that started this restaurant ended up having a boyfriend that started to get involved with the finances. Well, he was a gambler, and et cetera, et cetera. So they basically, next thing you know, this very popular restaurant that was, the Clintons went there, you name it. It was a who's who of everybody that went to these restaurants. It was very popular. So she ended up getting her boyfriend involved in the finance department and taking care of the finances. Well, he was gambling all this money away and the business was starting to fail. She ended up getting money to help keep the business going.
Okay.
All right. Well, same thing. This person ended up spending all this money, gambling all this money. Well, anyways, they went on the lam, basically.
Okay.
And after a 6-month period, now we were dealing with attorneys down in the city and we were dealing with the authorities, everything like that. She was actually caught on a tip, and we talk about tips being 40% of the time caught like that, caught by a Domino's pizza delivery man in Tennessee, of all places. I think that's where it was. They were in Tennessee, and they posted something on the television that they were looking for this couple. And this vegan person here, restaurant here, ended up getting a sausage and mushroom pizza, whatever it was, delivered to that. And I noticed that these were the people that were on the lam. And so that case was closed.
Oh, nice.
Oh, that's an interesting
So it's all about, so it's the pizza, the pizza brought the case. There you go.
The pizza case. But there's a lot of good, interesting cases out there. And, nowadays, Mike, with social media too, it's amazing what we can find out about a case so quickly.
We know this.
And about individuals. And it's changed. It's evolved. Our careers have evolved quite a bit from the very beginnings of being certified fraud examiners and CPAs.
The investigative tactics have changed drastically for the better, for the worse a little bit. But that's a good case. So Paul, thank you so much. How can anyone reach you in the firm, for any follow-up questions?
My number is 518-288-2120. Obviously through LinkedIn, you can see me. Mike has, posted about me, and I've posted on there, and you can my contact information is on LinkedIn. And, if you have any questions, comments, anything about today, or just anything, feel free to contact me or Mike if you can't get in touch with me, and I'll get back to you as soon as I can.
Great, Paul. And great. Thank you for your expertise. You're over 25 years. Look forward to continuing our professional journey, fighting a good fight, right?
Fighting a good fight. Good song, right?
Of course. Yeah, of course.
Long time ago.
We're not going to sing it though for you guys. We're going to save you. We're going to end on that one, I think. But so thank you, Paul. Thank you all for joining. I mean, we had some great engagement in the chat. We will absolutely get back to you with any follow-up questions that you have on this topic. And again, this topic was brought up by one of you. Something that you're seeing, a big pain point. So we enjoy kind of tackling these topics. So thank you again, Paul, and thank you, and look forward to seeing you episode 15, probably about 5 weeks out. So maybe mid-August or so. So stay tuned for that. And everybody have a great day, and we'll see you again soon.
Thank you.